Imagine this. Silver's weekend gap up has frozen at around $84 to $85 an ounce as we head into late February 21st, 2026, locking in that massive surge from Friday's close near $82 after ripping higher on COMEX. But now the market's in an eerie standstill. No fresh trading on Western exchanges over the weekend. Asian liquidity thinned out, and the real fireworks delayed because China's major markets, including the Shanghai Gold Exchange and futures hubs driving so much silver action, stay shut until Tuesday after Lunar New Year holidays. Traders are staring at screens, shorts licking wounds from the burn, longs riding momentum. But everything's paused, like a coiled spring waiting for China to flip the switch Monday night or Tuesday morning U.S. time. This frozen gap isn't calm. It's tension building in the shadows, with physical shortages, export curbs, and industrial demand still lurking underneath. Welcome to Elite Capital Decoded, where we unpack these weekend standoffs and elite delays so you see the next move before it hits. If this setup has you on edge already, hit that like button right now and subscribe, because when China reopens Tuesday, silver could either explode further or face the first real test of this rally. Let's walk through this weekend freeze like detectives, piecing together why the price is stuck and what it means for the bigger picture. Silver's February 2026 has been nonstop drama, blasting to over $120 in January on supply fears, China's grip, and tariff chaos, then correcting brutally 25-30% plus to mid-70s lows as margins hiked, dollar strengthened on jobs data, and Fed hawkishness bit hard. Shorts loaded up, betting the party was over. Then Friday's Supreme Court ruling struck down Trump's broad tariffs as overreach, but Trump countered with new Section 122 threats, reigniting uncertainty that fueled safe haven buying and a classic short squeeze. Prices ripped to close around $82 to $84 on COMEX, with spot pushing higher in thin after hours and early as. Now it's Saturday night into Sunday, your time in Islamabad around 11 p.m. Pakistan Standard Time on February 21st, and the gap up is frozen. COMEX and most Western metals trading shut for the weekend. No new prints, no forced liquidations, no big funds piling in or out. The price you see quoted is Friday's settlement or electronic indications, hovering $84 to $85. But real volume is zero until Sunday evening U.S. time when Globex opens limited sessions. This creates that eerie gap. Friday's momentum locked in, but no mechanism to fill it higher or lower yet. It's like the market hit pause mid-surge, bulls celebrating the burn on shorts, bears hoping for a fade when liquidity returns, but nobody can act until desks reopen. The real wild card? China. Lunar New Year 2026, Year of the Horse, shut down mainland exchanges hard. Shanghai Stock Exchange, Shenzhen, and crucially the Shanghai Gold Exchange, SG, and Shanghai Futures Exchange, SHFE, closed from February 16th through February 23rd, reopening Tuesday, February 24th. That's why silver's frozen. China, the heavyweight in physical silver, controlling 60 to 70% refined supply, massive industrial buyer for solar/EVs/electronics, has been offline for a week plus. Shanghai silver often leads price discovery during these periods, with premiums and backwardation signals that COMEX chases. Last seen before close, Shanghai was trading at massive premiums, $10 plus over COMEX, backwardation at records, signaling acute near-term scarcity as domestic stockpiles dipped to 318 to 350 tons, near decade lows. Their export licensing, only 44 approved firms for 2026 to 2027, keeps metal prioritized at home, starving global arbitrage and sucking physical from west to east.